Hi everyone, I'm David Weber, broker and operating manager of State Property Management, serving Orlando and the greater Central Florida area. Today I want to answer a question I'm hearing more and more from investors and homeowners. Is it still worth buying a rental property in Orlando in 2026? Interest rates are higher than a few years ago. Insurance costs have increased. Some vacation corridors have softened, and rent growth has leveled off in certain areas. So it's fair to ask, is the opportunity still there? In this video, we'll talk about what's actually happening in the Orlando market, where the risks are, where the opportunities still exist, and how to determine whether buying in 2026 makes sense for you. Let's dive in. The market has shifted, but it hasn't fallen apart. The ultra-aggressive appreciation and rent spikes from 2021 and 2022 are behind us. Back then, homes were selling in days and rents were jumping rapidly. What we're in now is normalization. Home prices have stabilized in many areas. Inventory has increased slightly. Days on the market are longer, which gives buyers negotiating power. Orlando still has population growth. Job growth remains steady. Long-term rental demand is still strong. The market isn't easy, but it's rational, and rational markets are often better for disciplined investors. Buying in 2026 requires better math. You can't buy based on appreciation speculation. You have to buy based on numbers. That means analyzing purchase price, interest rate, insurance, property taxes, HOA fees, expected rent, vacancy, maintenance reserves, and capital expenditures. If the deal doesn't make sense on conservative cash flow, appreciation should not be your backup plan. Small miscalculations today can eliminate your margin. This is a numbers game, not a hype game. Insurance is the X factor in Florida. Premiums have risen. Roof age matters more than ever. Carriers are more selective. When evaluating a deal, look closely at roof age, HVAC age, flood zone status, and wind mitigation reports. An older property may look like a deal, but if it needs a roof or HVAC soon, your margin disappears quickly. Newer construction can often be more predictable and stable in today's environment. Not all submarkets are equal. Orlando has dozens of micro markets. Stronger segments right now include lower price rentals under $1,800 per month, 3 to 4 bedroom single-family homes, suburban areas with strong school zones, and well-maintained properties. More competitive segments include vacation-heavy corridors and luxury rentals with heavy supply. Location and product type matter more than ever. Yes, Orlando is still investable, but selectivity is critical. Before we continue, let me say this. If you're considering purchasing a rental in Central Florida, local insight matters. At State Property Management, we help investors evaluate properties before they close. We review realistic rent projections, analyze maintenance risk factors, discuss neighborhood demand, and provide honest feedback based on what we're seeing on the ground. If you're under contract or considering an offer, visit www.managecentralfloridaproperty.com and schedule a consultation. We'd rather help you avoid a bad deal than manage one later. In today's market, appreciation will likely be slower, and that's okay. Rapid appreciation creates volatility. Slower, steady appreciation combined with stable rental income is more sustainable. If your entire investment thesis depends on the price of the property jumping dramatically next year, that's speculation. Smart investors in 2026 are thinking long-term hold, stable tenants, conservative projections, and quality properties. The goal is steady growth, not overnight gains. Your risk tolerance matters. Ask yourself, do I have reserves? Can I handle a vacancy period? Am I prepared for major repairs? Do I understand Florida insurance realities? Am I investing for 10 years or 12 months? Real estate builds wealth over time. It rewards patience and discipline. The investors who struggle are usually the ones who over-leverage or expect instant results. So here's the final answer. Yes, buying a rental property in Orlando in 2026 can still make sense, but only if the numbers work conservatively. The property is in the right location, insurance and maintenance are accounted for, and you're thinking long term, the easy money phase is over. But disciplined investors are still building portfolios right now. If you're considering buying and want an honest second opinion, visit www.managecentralfloridaproperty.com and schedule a consultation. If this video was helpful, like it, subscribe, and hit the notification bell so you don't miss future updates. I'm David Weber with State Property Management. Thanks for watching, and I'll see you in the next one.